you.
Thank you so much for that, lovely. Now, Thomas is here. We know he's here. We don't know where he's gone to. We think he's getting caffeinated. So when he returns, there should be real excitement in the room. So fortunately, Mattias is here.
Yes.
Are you caffeinated? You're good?
Well, no, I've got water here, so
Okay,
I think I'll be happy with that.
That's great. So maybe we should just, you know what, let's talk a little bit about Moonfire until Thomas gets here, because I'd love to dig into that a little bit. So obviously, I'm sure everyone in this room knows that Mattias is one of the founders of Atomico, one of the most storied VC firms in Europe. It was the first kind of credible founder-led venture fund. Then, at that point, I think the largest fund of its time. Yep. Certainly, the first, I think, to introduce diversity targets into its term sheets with firms that startups that you're investing in. So it's been quite a journey for you since 2006.
Yes.
Why Moonfire? Why now?
Yeah, so look, I'm super proud of what we did at Atomico, and there's like so many amazing people and so many fun things that we helped build there. And the idea was also from the beginning was about having impact on the European ecosystem.
Yeah.
And right now, I'm looking at the seed stage, and I look at what's happening in the US. The last 10 years in seed in the US has been transformational. I think it's an area here in Europe where doesn't really have the kudos. It doesn't really have the reputation or the allure. And people think, oh, that's smaller stuff that's going on. But the world has changed. Like seed stage investing today is anywhere between $2 and $5 million. And actually, you might actually have had meeting companies that have raised 2 rounds of funding before they get seed. So you have angel rounds, pre-seed, and then seed. Yeah. And so what I think, welcome.
Were you making an investment?
I was told for 15 minutes. So.
Welcome, Thomas. Sorry, Mattias, you were saying.
So that transformation that we saw, sorry, if I go back to the US, the last 10 years, they've really flourished, right? And so you have companies like First Round, Floodgate, True Ventures, and they've been able to create cohort after cohort of great founder-led companies. And I sort of see that we need to be able to do the same thing here in Europe. Some powerful, strong seed funds that really set the stage for those companies to really build and become scalable businesses.
You wrote a great piece for Wired a few months ago where you talked about seed in Europe being, I use your words, it remains fragmented, immature, and definitely underfunded. Why do you think that is?
Yeah, so like I said, I believe that it hasn't had the allure, and it hasn't really brought in the expertise and competence that we sort of can see is required now for the next stage of development. There's been a lot more money going into Series A and B, and if you look at the growth rates there, you can see that Series A has grown by 4x over the last 5 years, whereas seed has only grown by 3x. Right. So what you're having is those later stages are growing faster than the earlier stages. And to me, that means that actually it's just a matter of time, the earlier stage, because they're going to need to have that growth coming from somewhere. The companies that they're looking for need to come from somewhere, and that's going to come from seed. And actually, it's going to become its own lane. It's its own area of competency, because it's very different investing in seed than from Series A and Series B. I mean, it's not night and day, but it's a different level of competency, different way of looking at companies. And so I think that will form over the next 10 years. So I think that it's sort of, we're looking at the golden age of seed. You're going to create funds, because those US funds, not only have they invested in great companies, the returns have been remarkable, anywhere between 5 and 15 times their funds, right? So we're going to see the same evolution in the seed space.
Okay, so let's maybe take a little bit more of a kind of a macro picture now. Obviously, pretty much every European government is thinking about investment in startup and the ecosystem. I'd love to hear from you, Thomas, a little bit about the way you think about it and how it's being done in Germany, and why maybe it's different from elsewhere in Europe.
Yeah, so if we look at the startup ecosystem here in Germany, going back 10 years or 15 years, this was almost a kind of a desert here. And we started with a lot of engagements also from the government, and in the end, when we're talking about seed phase, but also Series A and B, for a long time, the public money was a huge amount of of all of the money in the market. And right now, we are investing for around 8 billion euros as a government. So we have several programs. It's starting with the EXIST program to build out of universities. We have high-tech Gründerfonds, free funds in the meantime, 900 million euros. Then we have new Coparion for later stage investments, ticket size up to 10 million euros. We have a venture debt program that's quite new, €500 million for more mature companies to get venture capital, not venture capital, to get credits.
Yeah.
And therefore, very huge investment parts are the KfW Capital. That's quite new. They're investing around 2 billion euros in funds, and also the EIF. They're also investing in funds, and this will increase in the first quarter of this year to 3.7 billion euros. So all this together are 8 billion of public money. It's a lot of money, and we wish to see more private money here in the market.
Sure. And how can you encourage more that increase in private money? Like, how can the ecosystem grow a little bit more?
Well, look, when we started at Atomico, like you said, it was one of the biggest funds of its time as a launch fund. And we raised around 100 million, right? So 115 million euros. The difference today compared to then is remarkable.
Yeah.
So there was actually, trying to find a European LP was very, very tricky.
Yeah.
Most of them really were international LPs who were used to investing in this asset class. Today is a very different story. I think every serious institution is considering or thinking about what their role is going to be in this asset class, which is highly performing extremely well. You know, and we can get into the statistics of that, but like in 2012, which is not a long time ago, we had $10 billion companies here in Europe. Today, it's over 100.
Yeah.
And so that is, you know, that's making the excitement of the private sector, because they say, well, hold on a minute, we need to have a little bit of an allocation to this asset class. So to me, it's just, you know, you talk about deserts, but it was absolutely a desert when we started off. Today, it's so different, and the competency of the private capital is just so different. It's night and day.
So that now means that startups at every stage, whether we're talking about seed or whether we're talking about, I don't know, Series B or maybe even, I know, Series C, maybe we're still lacking behind a little bit in Europe, that European startups will be able to find, local investors rather than having to go elsewhere into the marketplace, right?
Well, I absolutely believe there's, look, I mean, Europe is still a lot smaller than the US, right? I think, I haven't looked at the figures yet, but overall it's usually about 5 times different, right?
Yeah.
So they're 5 times bigger in the US. But we're growing at 25%. And I think that in 2019, it's 36 billion that was, you know, that went into the market, and that was a 25% increase, which means that every 5 years you're doubling the size of capital going into venture.
Okay.
And I think over the last 10 years, you know, it's probably gone from like 5 billion now to 36 billion. And so there's lots of capital here, and yes, there's a lot more required, because the solutions and where the things that you're solving is not just certain niches in the economy, it's the whole economy, which is why the interest of politicians has been so great. Like, you're realizing, okay, we need engines for growth. Where are those engines? And it actually is in technology, which is touching every part of our economy.
Yeah, Thomas, when we talk about engines for growth, we saw the way that, I mean, the Valley really was founded on, frankly, on government money through the investments made in DARPA and those kinds of agencies. What do you think of the new areas of interest for government in terms of really lighting a fire under that ecosystem? I mean, is areas like deep tech, is that what you're excited about in terms of how government can really, you know, the German government can really get things moving here?
Yeah, first, I will stress everything that was said. It's for our economy very important to be ahead of the wave. And therefore, we have to invest more in tech, we have to invest more in startups. And in the end, if we're talking about exit channels, there's also a huge role for the big corporates. Yeah. And what I see is that the corporates in the United States, especially in Silicon Valley, I mean, some people believe that Facebook and Google are the biggest M&A companies on the world. Yeah? They're buying startup every day, and they give them the freedom to develop. And so this is something very important. This is a role for the private sector. And second thing, role for the private sector is investing more here on the place. We have these big insurances, and they're investing a lot in private equity, also in startups, but then most of the time elsewhere in Silicon Valley or in Tel Aviv or wherever. And therefore we are building some new models right now. Maybe you heard that the coalition decided to invest a further 10 billion euros, coming up to these 8 billions I already talked about. So this is important for us, twice the amount that France and Emmanuel Macron is going to. And now there is a working process inside the government what to do with this 10 billion euros. Okay. And we have several pillars where we look at, and one of these pillars, and I think this is quite new, that has not been discussed in public until today, is that we want to go for deep tech. This is very important for us, to have patient capital, investments for 10 to 20 years, where we want to go with government money, but also with money from private investors, maybe from family offices.
So what are you looking for when you make an investment? I mean, what are the criteria? I mean, that's a question for both of you. Like, what maybe you could start, Mattias, like, what's the criteria that you're judging startups on these days?
Yeah, I'd like to comment on one other thing here, though. So what I think is really interesting is looking at a real macro stage. I'm not sure you can even comment on this, but like, you know, we have obviously the U.S. as a big power, and they're flexing their muscles on tariffs and all sorts of things, and then we have China as well, which are flexing their muscles. And what is the role of Europe? Like, what's our role in our innovative role? Right? How do we play a part? And I think, you know, really Europe is not. We are not still a single entity. We are a bunch of. You know, Germany's thinking about its its automotive sector. You know, that's what it cares about. Does Sweden care about it? I don't know. Does France care about it? I don't know. Right? But the Chinese care about. I was just reading in the newspaper today. They care about 5G and Huawei doing that here in Germany. Right? So this is a hot topic. And I think, you know, it's going to be important for us in our ecosystem. How do we deal with these difficult decisions? Right? These are things that we need help from even our politicians to help us negotiate our future, right? Because there is a bit of a power play and there's trade happening here. But you know, if we're looking at building the next generation of these companies, the Googles and the Facebooks, that's the level that we need to be playing at, right? And that's going to be exciting. And I think at the moment we're a little bit naive in thinking that that's a free playing ground. That whatever you do, you'll be able to get anywhere and build a global business. But it is actually the big challenge that we have in front of us.
But is it also an advantage, especially for a smaller, maybe not for a Germany or a France or a UK, but if you're a smaller, Stockholm being a fantastic example, Sweden being a fantastic example, being able to sort of think, you know, Israel's an amazing example, thinking globally from the outset, because they have to, because the marketplace.
Absolutely, but I also believe, and again, like I believe that countries even like Germany, in the face of huge countries like the US, China, Japan, and India, we're tiddlers, right? There's not much flex we can have. And so you have to build the next generation of businesses that are conquering new areas of innovation where we're creating a leading role. So what is the role, I'm saying again, what is the role of Europe in that? And how do we thread that needle? What we're great at is international commerce. We are great at, you know, Europe is a multicultural, multilingual place. We're used to doing deals in different countries from the beginning. Whereas those other nations probably don't have as much of experience with that. And we've been doing trade with globally, you know, for over 100 years or hundreds of years. So that's what's exciting.
So Thomas, as the only politician on this panel, I'd love to ask you the same question, like, or the question that Mattias is asking is like, what's the role of Europe?
Yeah, I believe we are in times where we have to find the role of Europe. And as you can see, there's very strong the Chinese side and the American side. And our success story over a long time was the free trade and the globalization. And we benefit in Germany very much from globalization. And we're selling our industry products all over the world. We're very good in creating hardware. We're building the best machines on the world. But on the other side, this way we're building machines to have the most perfect machine. You develop very long, but then it's very perfect. That's not agile. That's not a system you create software and e-commerce platforms today. And so there is a shift going on. But I believe if you look back, these last 10 years were also a success story. And we see a lot of startups right now. We have more than 30 unicorns here in Germany. And some years ago, you could not imagine that. And so young guys are heading towards data analysis and AI and blockchain and all these technologies. There are a lot of want to build their companies, and we are attractive for foreign talents, especially when you look at Berlin. The most VC is raised in Berlin these days, and there it's a very international scene. People from all over the world are being attracted from Berlin.
And your US VCs relocating to Berlin has been a trend for 3, 4, 5 years now.
And that is actually a really important trend, right? And I think that one of the most exciting things that have happened over the last maybe 9 to 12 months is the growing interest of US VC funds in Europe. It's been remarkable. So not only are we having more, so if you look at all the announcements over the last 12 months of European venture funds that have raised bigger and bigger funds, because they're now getting bigger and so on and successful, but you're also having US interest into Europe, which is really strong, like nothing I've seen before. And it's not about telling Europeans, hey, you guys have great companies, can you please come to the US? It's more like, no, we think you have great businesses, build them here, you have great engineers, and we want you to scale up here in Europe. And then, yes, you can also come to the US market, which could be really interesting for them.
But this is upside and downside in one, yes? When we talk about the phases of investments, and you say, so there is more to do in seed financing. From the government perspective, we see that seed financing is doing quite well. So if you look at the ratio to US, it's much better than the later stage investments. And what comes to it is that the American investors are coming more and more to Germany and investing here. So for founders, money is there. But on the other side, this is almost foreign money, and this must not be good for a company. So in the end, we have no problem with foreign money. The opposite is true. We love every investor coming to Germany and investing in technology. But if you only have foreign investors, that will lead to a problem at some point.
I actually want to disagree with you on the seed point, because my analysis, which can be faulty, but the work that I have done, and I looked at the numbers, the US, they of their total funding going into venture, it's the amount that goes into seed is 40%, whereas in Europe it's 44%. Where in Europe it's about 20%. So actually, seed relative to the total amount of funding, and we can compare these in different ways, but that to me there's not enough in seed. And definitely, if you look at the number of eminent seed funds in Europe compared to the US, we're not there. And there's also been a transition, let's be clear. Like, seed used to be something where you put in money less than $1 million. Today, it's between $2 and $5 million. So it's basically replaced what used to be called Series A. That's what seed is today.
But there we have a different analysis. Maybe the question is, where is the money spent, or where does the money come from? And where does the money come from? The situation is that in the end, we have seed phase, there is room for more. So we appreciate your engagement here. And before we talked about question, not that only money is relevant, but also expertise. And players with good expertise are very, very welcome. But the later the stage goes, the less the European money is there. And if you're if you're looking for rounds more than 50 million euros, there is almost nothing here from German and European investors. And there we want to go into. And one of the instruments we are creating right now, also with this new future fund with 10 billion euros, one of these investments will to get the insurances more into the VC market here in Germany. And therefore we are discussing a model that's called Waterfall Model, where we set up a fund that has two parts. One part has a guaranteed interest, a pretty small guaranteed interest, but no risk. And on the other side, we have a part of this fund that's in full risk, but also has the full upside. And we will engage in this part with risk and upside. And we hear from the insurances they're interested to get in instruments with a guaranteed interest. And if it helps them, and we want to start want to start with them, that they begin invest in the startup ecosystem here in Germany, and we hope that in the end the process will run further by themselves, because we have good companies, we have good investors, and we also have good interest that will come out.
Okay, so we're running pretty short time at the moment, but I want to ask you both the same question, which is, there's probably some founders in the room, people who are really thinking about, what their next venture is going to be. Where do you think the real areas of opportunity are? If you're thinking about investing, or deploying capital into a startup that's really just beginning to sort of like emerge and figure out product market fit and all those kinds of things, where are you looking? Where do you think the areas of opportunities are that founders are really able to do, new things?
So to me, there's so many different ways I can answer that question, right? So one is geo, what geographies. I think the interesting thing across Europe, there's opportunities in terms of, for me, looking for deals. It's everywhere in Europe. I see that, it's, what used to be a few clusters now is basically anywhere that there's probably a good technical hub of sorts. You can build a great company. And the areas that I focus on are fintech, future of work, gaming, and healthcare software services. So to me, that's really important to be focused on a few areas where I've had successes in terms of investing in companies and where they've gone on to be, billion-dollar companies, and so carry on that, right? So those are probably the areas. But I have a thesis as well that I work around that's much bigger, but essentially I think that those areas are still huge. I mean, fintech is just beginning, and today, we have 20 in London alone. It used to, in the new year, or it was in October, they said there was $18 billion companies. Now there's $21 billion companies in fintech alone in London. So Europe is actually, it's if it's an area that we're unique, like we're pretty liberal on our not liberal, like there's good regulation, but it's pan-European regulation. Which makes it very interesting for anybody starting up a fintech company. But future of work, I see the change in our workplace is going to be enormous in the next 10 years, where people are, changing jobs, working remotely, upscaling, reskilling, and there's a whole bunch of other changes in the way we live and work because of that, which I find really exciting. And then gaming has been an area that I think Europe has been really good on in creating content, and we've had King, Supercell, Minecraft and so on. So we've been very good at that, and I want to carry on that tradition. And I believe that all content is going to be some form of game, like even video or whatever the kind of content. So those are some of the areas that I'm interested in.
So I want to ask you pretty much a final question. Actually, no, let's try and get a couple more questions in. We're running out of time. But for one area I think we should address is, so Tom was here earlier, who does for Atomico, does the European State of Tech report. Still, last year and this year, tiny percentage of funding, VC funding goes to women, tiny percentage goes to ethnic minorities. How do we change that? How do we get more kind of involvement and make sure capital is deployed in a fairer way? Do you have any thoughts on that in terms of policy?
I believe we need to encourage more women. So this is a huge problem for us. So when you look at technical stuff, there are too less women. And if you look at entrepreneurs, we only have around 10% of the startups are founded by women. That's not enough. And we need a 50-50, and therefore we need to encourage the girls. And I believe that this all depends on the school. And something happens in school that young girls are heading for entrepreneurship when they're very young, and then they lose it for some way. And what we also need is more role models. If you have the right role models, we see that there are others coming behind. And so Frank Thelen was extremely helpful for us, with his TV series to encourage young people getting entrepreneurs. And so maybe we need a female Frank Thelen.
Okay. I mean, you guys were the first to put this in your term sheets,
Look, I mean,
right?
this has been super important, and Atomico deserves a lot of credit for that and forward thinking. And it's a long way to go. I think we've only just started in terms of that change, but it is being mentioned, and it is something we're talking about, and we need to keep talking about it. It has to be on the agenda the whole time, and so for me, for example, I've done my own angel investing. I've invested in a female founder in the gaming space. I've invested in somebody who's from an ethnic minority as well in the sort of fintech space. And so it's up to us also to, we have to have that self-reflection and realize that, look, we have biases, make sure we don't, that we're working around them somehow. But I think we have a lot of work to do. I think it is great news that, for example, you bring it up on these types of panels, and it's something we have to talk about every day.
Great. Well, I think that's the note of optimism that we can, grow the ecosystem and make it more sustainable and also make it fairer and more equitable for everyone. Thank you, everyone. That's the end of the panel. Thank you.
Thank you.
Cheers.
Thanks, Greg.
Thanks, Mattias.